In today's video, we're diving into the fascinating world of stock analysis and research. Understanding stock analysis is crucial for anyone looking to invest wisely in the stock market. It involves evaluating a company's financial health, market position, and potential for growth, helping investors make informed decisions. This process not only aids in identifying promising stocks, but also minimizes risks associated with investing. Throughout this video, we'll explore various methods of stock analysis, including fundamental and technical analysis, and discuss key metrics to consider. By the end, you'll have a clearer understanding of how to evaluate stocks effectively, empowering you to make smarter investment choices. So, whether you're a beginner or looking to sharpen your skills, stay tuned for valuable insights that can enhance your investment strategy. Understanding stock analysis. Stock analysis is the process of evaluating a company's financial performance and market position to make informed investment decisions. It plays a vital role in investment strategies as it helps investors identify undervalued stocks and assess potential risks. There are two primary types of stock analysis: fundamental and technical. Fundamental analysis focuses on a company's financial health, examining factors like earnings, revenue, and overall economic conditions. In contrast, technical analysis looks at historical price movements and trading volumes to predict future trends. Key metrics used in stock analysis include the price-to-earnings (PE) ratio, which indicates how much investors are willing to pay for each dollar of earnings, and earnings per share (EPS), which measures a company's profitability. Understanding these fundamentals will enhance your ability to make sound investment choices. Researching stocks. Effectively researching stocks is essential for making informed investment decisions. Start by identifying reliable sources of stock information, such as reputable financial news websites like Bloomberg, CNBC, and Yahoo Finance. These platforms provide up-to-date news, analysis, and insights into market trends. Analyzing company financial statements is equally important. Focus on the income statement, balance sheet, and cash flow statement to understand a company's financial health and performance over time. Additionally, consider using stock screeners, which are powerful tools that allow you to filter potential investments based on specific criteria, such as market capitalization, PE ratio, and dividend yield. By leveraging these resources and tools, you'll be better equipped to identify promising stocks and build a well-informed investment portfolio. Happy researching! Evaluating stock worthiness. Determining if a stock is worth buying involves assessing its current price in relation to its intrinsic value. Intrinsic value represents the true worth of a company based on its fundamentals, and comparing this to the market price can reveal potential investment opportunities. One effective valuation method is discounted cash flow (DCF) analysis, which estimates a stock's value by projecting its future cash flows and discounting them back to their present value. This approach helps investors gauge whether a stock is undervalued or overvalued. Additionally, it's crucial to consider market trends and economic indicators, such as interest rates and inflation, as they can significantly impact stock performance. By combining these strategies, you'll be better positioned to make informed decisions about which stocks to add to your portfolio. Easy ways to value stocks. Valuing stocks doesn't have to be complicated. One of the simplest methods is to use basic valuation ratios like price-to-earnings (P) and price-to-book (PB). The PE ratio compares a company's current share price to its earnings per share, helping investors assess whether a stock is over or undervalued. Similarly, the PB ratio compares a company's market value to its book value, providing insight into its valuation relative to its assets. Another useful metric is dividend yield, which measures the annual dividend payment relative to the stock price, indicating how much income an investor can expect. While these quantitative methods are essential, don't forget to consider qualitative factors, such as management quality and competitive advantages, as they can significantly influence a stock's long-term performance. Balancing both approaches will enhance your valuation skills. In this video, we explored the critical role of stock analysis and research in making informed investment decisions. We discussed how understanding both fundamental and technical analysis can help you evaluate stocks effectively. Key takeaways included the importance of comparing a stock's current price to its intrinsic value, utilizing valuation methods like the PE and PB ratios, and considering qualitative factors alongside quantitative metrics. Remember, thorough research and analysis are essential for identifying promising investment opportunities. If you found this information helpful, please subscribe to our channel, like this video, and share it with others who are interested in enhancing their financial knowledge. Stay tuned for more insights and tips to help you navigate the world of investing with confidence.